Yo, what's good, y'all? So this is how I caught nearly 130 points trading the NASDAQ today. It made about $800. I took four micro NASDAQ contracts. So let's get right into the chart. So also, I know I haven't made a lot of content videos this week. I've been sick and I'm finally getting over it. I don't know what I had, but I was sick last week. You could literally hear me coughing in all those videos. So now I'm feeling back to normal. So hopefully can get a couple videos out this week today. Hopefully get another one out tomorrow. But let's kind of get into today's price action and what I was looking at and what I saw. So first thing I want to point out is that the market has been obviously in a downtrend for about the last month now, and it looks like now we're trying to draw to these lows here from September at 18,865. So to me, that's our current sell side liquidity, drawn liquidity. So that's kind of what I'm anticipating the market to reach into at some point. With that being said, if we look closer, we did have this 1 day buy side imbalance, sell side inefficiency, fair value gap that the market did trade into yesterday, and we responded or rejected it nicely today. You can see we completely rebalanced that range or that entire gap, and now we retested it today in Asia session last night, and we've been selling off today. So if we take a look at the 4-hour chart, you can kind of see what the market looked like here. You can see there was also a 4-hour sell side imbalance, buy side inefficiency that we had been trading into, right? And the market now looked like we were potentially trying to have a change in state of delivery to the downside. So this series of up close candles, if the market can close below this series of up close candles, that will be a change in state of delivery to the downside, and it would continue to show that we're holding bearish order flow. The reason that would be a change in state of delivery and not this down close candle or these down close candles is because this series of up close candles, let me put this on, this series of up close candles swept this high from Tuesday, right? We can only have a change in state of delivery off of the series of candles that sweeps a high. So this high was swept Wednesday, and now once we get below the series of candles that sweeps that previous high, that now validates that we're now having a change in our order flow, in this case from bullish to bearish. So like I said, we traded into that SIBI to yesterday and then retested it in Asia session. You can see the 6 p.m. candle, 4-hour candle, retested it. So going into today, I was looking to find a short setup to target either this sell side liquidity that was here, right? We can go ahead and outline that. Targeting that, or this open price here, right? This change in state of delivery. But I wanted to see where our 4-hour candle at 10 a.m. was going to open up. So going into 10 a.m., this is kind of what the market looked like. Now, I like to play the PO3, right? What is the PO3? It's the power of 3. The 10 a.m. 4-hour candle, power of 3. What does that look like? Well, the 10 a.m. candle opens, right? And once we open, if we're in a bullish order, if we're in bearish order flow, we should open, trade higher into some sort of lower time frame premium array here, right? And that should send us lower, right? And then we should ultimately close somewhere here. That would be how this bearish candle would ultimately end up forming, right? Open, high, low, close. That's essentially what I was looking to play. So at 10 a.m., I'm now my thinking now becomes, okay, I need to find a discount, a premium array, right? Some sort of bearish array on a lower time frame, preferably the 15-minute, that I can look to take a short entry in, right? And then look for a confirmation, an internal sweep of liquidity, and then also a change in state of delivery on the 1-minute time frames. So if we look at our 15-minute chart, we can see that here at 10 a.m., this is what the market looked like going to 10 a.m. Looking for a bearish premium array above us, right? We have this 15-minute fair value gap. That was what I was ideally looking to find a short setup off of. So this 15-minute fair value gap, which formed at 9:30 a.m. So you can see at 10 a.m., the market does open. And what do? We perfectly retest that change in state of delivery price, right? That 4-hour change in state of delivery that I outlined. And we trade higher, returning into this 15-minute SIBI, right? This 15-minute bearish fair value gap, right? So then if we go down to our lower time frame, now essentially what I'm looking for is a sweep of liquidity, a change of state of delivery, and an SMT would be nice, but it's not necessary. So you can see that at 10:15 a.m., this is what the market looks like. Our current liquidity is this high here, right? This is some buy side liquidity that's resting right at this 15-minute SIBI. Is that a coincidence? Of course not, right? And we also have some liquidity here, right? That's resting right above the 15-minute SIBI. Is that a coincidence? Of course not. So now essentially I'm watching to see, can we sweep this liquidity and then close below the series of candles that swept that liquidity? That would validate now that we're short on the lower time frame, right? You want to align time frame, and you need to know what time frame execution aligns with each other. If you're looking to take a trade off of a 15-minute discount or premium array, in this case a 15-minute SIBI, you should be executing on the 1 minute. If this was an hourly SIBI, right, you'd be executing on the 5-minute. But I personally prefer the 15-minute because I like executing on 1 minute over the 5-minute, because generally the 5-minute ranges are much bigger. Especially recently, the market has been extremely volatile. Candles have been very aggressive, right? We're getting 40, 50 point 1 minute candles. So 5-minute candles have been 60, 70, 80, 100 points, right? So generally it's been better for me to execute on the 1 minute time frame. So if we fast forward this, you can see the market then continues to trade higher, right? We continue to make a high here, and then we sweep this liquidity. Now at this point, if I want to see, okay, I want to look for a short opportunity. I want to see, where is the market now going to, can we get a change of state of delivery? At this point, a change of state of delivery would be a close below this candle here, right? Because this is the series of up close candles that swept the liquidity, right? Right? If this black candle wasn't here, this down close candle, where would it be? It would be here. But because this is a high, a low, this is now the new series of up close candles that swept the liquidity. So now I want to see, can we get a close below here? Okay, the market then trades into this 1 minute BTC. We continue to trade a little bit lower, but ultimately we're not able to get the close below there. So now I see, okay, well, we swept this liquidity, right? That's liquidity because that's now a high, right? So now that liquidity is swept, I'm now looking to see, okay, can we get a close where? Below this series of up close candles, right? Is it a coincidence that the open price is aligned right at the 15-minute SIBI? Of course, that's not a coincidence. Nothing is random in this market, right? So now I want to see, can we close below this opening price, right? So boom, we trade higher and we sweep this liquidity as well, right? So now that's the high that we swept, but still that's the same series of up close candles. This series of up close candles is the up close candles that swept this high, right? So now this is what happens. Market does try to make another push, but we fail. So now at this point, if we were to sweep this high, right? If we were to sweep this high, now this up close candle here, because this is technically an up close candle, right? By 1 tick, it closed up. That would now be our change of state of delivery. But right now, because we haven't swept that high, this is the last high that was swept by this series of up close candles. This is still our change of state down here. So now you can see the market then, we start to see some aggressive selling here, and boom, there's our change of state of delivery, right? And that is what you want to see. That is called strong displacement through. That's a 40-point candle. That's what you want to see, right? And so now this is the start of a market maker sell model, right? And so now I want to see us return back, because I don't want to take this trade here, right? Because that risk will be way too high. If I was to enter here with my stop loss here, that's an 83-point stop loss, trying to target the 10 a.m. opening price, which is here, right? This 10 a.m. open price, that's a decent risk reward, but it's not great, right? So I'd prefer us to come back here and retest the change in state with my stop loss above here, right? One thing I also want to point out is we did also have this SMT. Remember what I said, SMT is not needed, but it is nice to have. The NASDAQ failed to take out this high, while the S&P did take out that opening high. So that was another confluence that made me pretty confident in this short setup. So from here, you can see that we did, now the market then comes back and we trade a little lower here. So now at this point, my mindset is if I miss it, I miss it. But I do like the fact that we formed this 1 minute SIBI here, because I know generally the market will like to go rebalance that. So now I'm kind of just watching, and boom, we get our retest here. So at this point, this is where I enter with 4 contracts short. I entered here on the change of state and I have my stop loss above here because this is now a protected high. This high should not get taken. Why? Because this is the high that swept the liquidity as well already, right? And there's also an SMT. So this high should be protected. So I'm pretty confident in this. So stop loss above here, right? $500 stop loss targeting this opening price here, potentially looking to even take partials here along the way, right? So, because even this would be, you know, pretty much a 2-to-1 risk to reward. So that's not a bad entry here, but ultimately you should target the 10 a.m. open price because remember, we're playing the 10 a.m. power of 3. So we should anticipate 4 because remember, all this is just a manipulation on the 4-hour. So we should anticipate for that 4-hour candle to be at least go retest the open price, right? So now at this point, you can see we're still holding the SIBI. And then we do get some delivery out of here, pretty smooth delivery. And now, you know, we kind of come back, retest it one more time, and we're still in that macro, right? This is the 1020 to 1040 macro window, right? So now the market kind of consolidates here, and then we do trade lower. And then we get some nice displacement, right? That's great displacement out of here, but kind of just watching, not really, you know, so eager to sell. And then we get some continuous selling here. Right now we're outside of the macro window. We take that off. And now at this point, now we're starting to form new highs and lows. So now we have a low here, we have a high here. And so now I want to watch, how does the market respond to these highs and lows? As the market is presenting you information in real time, you should be watching to see how are we responding to this information in real time, right? So you can see we do sweep this internal liquidity here, right? And then the market does come back. We sweep this high now, right? But now this is why we have to switch time frames, and you have to see we have a 5-minute SIBI here, right? This is the price continuum theory. You have to be able to switch time frames and look and see what's happening on different time frames. Because if I didn't see this 5-minute SIBI, I probably would have got shaken out this trade, right? But because we have this 5-minute SIBI, I was confident to hold through this retracement, right? I was confident that as long as this 5-minute SIBI, as long as we don't close above this 5-minute SIBI, then we should, you know, hold this price. So you could see the market does respond nicely out of that 5-minute SIBI, right? We got some nice displacement out of there, but ultimately we do end up coming back once that 11 a.m. candle opens. But again, we're still holding that 5-minute SIBI, right? And something very interesting happens here, right? So you see now we formed a new high here, right? This is a new high. This is a high as well. So again, you want to see what is the market telling me in real time as this trade is happening, right? So you can see here, the market, we trade into this 1-minute BISI. We trade higher, and what do? We sweep this high, right? We sweep this high. Now, once we sweep this high, what should I look for? Well, I want to see, do we have a change of state of delivery? What's the series of up close candles that swept this high? It's this one, because this is the last up close candle before the high was swept. So now this candle should send us lower. Ultimately, we should not come back above this high, right? So at this point, this is when I can move my stop loss now above here and at least lock into profits, because now this high should be protected, because now that we've swept this high and had a change of state again, this high should be protected, right? And again, we're still holding that 5-minute SIBI. So you see, what do? We perfectly retest this up close candle, right? Perfectly, right? In the middle of this London close 1050 to 1110 macro, and you can see we get some nice displacement through this low, right? And ultimately we get a nice delivery here, right? And then even into our opening price, which we know was resting here at this 10 a.m. candle. You could see we trade into this 1-minute SIBI, and then we get that delivery here perfectly into that into this opening price. So that's how you want to be able to just kind of manage your trades. You're watching what it's telling you in real time, and you could see we continue to trade lower, and I believe we do go and take this liquidity ultimately and through that change of state of delivery, right? So there was way more meat on the bones on this trade, right? I think I left a lot off of it, but it's totally fine. The market has been very ruthless this week, so I'm totally cool with taking my profits when I have them and trying to, you know, just minimize my losses. So this is kind of how you want to be able to manage your trade in real time, watching to see what is the market doing, how is it respecting highs and lows, Are we respecting other imbalances on higher time frames, right? You want to be aware of those things. Don't just be so focused on living on this 1 minute chart, right? If I seen that we closed outside of this 1 minute SIBI here, I could have exited out of this trade prematurely and missed all of this, right? So you don't want to let this whole drawdown holding through this, don't let it be for nothing, right? And I'm saying this because that's what I would do. I used to do that frequently when, I'm like, oh, I don't want to give my profits back. But once you understand what the market is actually doing, it gives you opportunity to be able to hold trades longer to target actually. So that's pretty much it for this trade. It was a great trade opportunity, and I think it was great execution to me. This was the best, I think, trading day of this week so far. Like I said, it's been very volatile. There's been a lot of landmines, so you have to be very careful this week. But yeah, that's all I got for y'all in this one. I will see y'all in the next one.